The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Mark Vendetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Mark Vendetti.
Good morning, happy Tuesday, and welcome back to the Financial Exchange. We got a little bit of a early morning red on the screen here, especially in tech stocks with the tech-heavy NASDAQ down 310 points on a lack of not a whole lot of news for those companies in the first place, but we've got a heavy week for retail earnings with Home Depot going this morning, Walmart, Target, TJX, and others reporting this week. Lowe's, of course, also going this week. But wanted to start and kick off the show with the bond sell-off that we have been seeing, Mark, because every time that there is a bond sell-off, we saw one last year as well, a whole bunch of journalists come out and say that the vigilantes are back, and we are seeing people finally exercise their concern over deficits and look out because this could get a lot worse. I don't want to entirely dismiss those concerns either, but when we see a bond sell-off, I just have to discuss and walk through the mechanics, because most people don't invest in individual bonds by and large. When people think about a stock sell-off, they can very easily picture that in their head, but that relationship between yields versus bond prices is a little bit more complicated, and then who actually buys bonds like this, because the average person I meet doesn't have any interest in buying 30-year government debt. So, just how these mechanics work is important. When we start off with the basics here, the yield on a 10-year U.S. government bond is right now sitting at 4.72%. And then when we look out at longer-term bonds, what was it, the 30-year Treasury that hit the 30-year U.S. Treasury rose to the highest level since 2007 in the United States. And we are seeing this occur across most developed nations, whether it's UK, France, Germany, Japan. And so I guess the question would be, mechanically, why, Mark? Because, like I said, every time yields go up, people start blaming it on deficits, and that is an easy culprit to blame. But what's mechanically happening?
Just with respect to price movements, it's either supply or demand, and we can that doesn't answer any questions. By the way, it just points out that it must be the case that either the price somebody's willing to pay or the price somebody needs to part with something has changed. It doesn't say why.
Yep.
We'll get into the why. That's more interesting.
Yeah,
but
importantly,
it's supply and demand.
Right, important to discuss that, right? Whether it's bubble gum or government bonds, the price is determined by supply and demand.
You've always got a demand curve, if you like to think about the world that way, and a supply curve. And they cross. They're both lines. They only cross at one point. That's the price. Mm-hmm. You talked about mechanics. I guess you meant, why do prices fall when investors demand a higher interest rate? It's because the interest rate is the coupon, the payment that you get. And this is true of any asset. It's the payment that you get. If you want to think of a fraction, it's a numerator. It's on top. Right. And the principal, or what it's worth, and this could be rental property, it could be a stock. What I'm getting at here is yield. There's a numerator, there's a denominator. There's a thing on top, there's a thing on the bottom. If the thing on top is 5, the thing on the bottom is 100, you get 0.05. Yep. That's 5% yield. Right. The thing on the bottom, the 100 in my example, which is known as the par value in bond parlance.
So a new bond gets issued at $100.
Just call it 100. It could be 10, it could be 1,000, but they call it 100.
30 years from now, when it matures, it'll mature at
you get 100 back.
Got
Beautiful. But in between, of course, is where the action is. That 100 is going to move around. So think about the yield. Again, it's a fraction. You got something on top. The 5 always stays the same in my example.
Yep.
Issued a bond, par value of 100, coupon rate of 5. Yield is 5 at the time of issue. If the bond price doubled, this is a stupid example because it doesn't happen, but if it doubled, the 5 stays the same on top.
Yep.
The yield therefore drops by 1/2. Similarly, if it decreased in price by from 100 to 50, the yield will go up to 10 because the 5 on top stays the same. That's the essence of bond mechanics.
Doesn't generally happen in government bonds, but happens in corporate bonds all over the place, and some municipal bonds, and even some sovereign debt here and there. But so mechanically speaking, what we're talking about here is investors, or I guess generally investors, unwilling to take a yield as similar as it was at the earlier this year for a long-term.
Let's go back to my
bond.
example. It's you and me. You want to give me a bond with the features that I mentioned. There's a 5 on top. There's 100 on the bottom.
Yep.
That's a yield of 5, right? 0.05 is that quotient, so it's 5%. Suppose I think inflation's going to be 8. I ain't going to buy that 5% yield bond from you. I want 8. So I've got to push the number on the bottom. My bid is now going to be 92, not 100. I'm just making that up. It's close to 8. That's why bond prices go down when, say, inflation expectations go up. Or suppose I think the issuer of that bond is going to flood the market. It's going to force the price down. I'm not going to hold that bond for 100. I'm now going to pay 90 for it. That's why the yield goes up. Just keep that fraction in your head. And it explains everything about what bond prices do and yields.
I want to then go over to the potential causes here because, like you said, could be supply, could be demand, could be any number of different aspects of those two things. Last year, I think it was last fall, we started to see yields climbing maybe it was last summer. Let me double check here. So, August, July of 2024. August, September of 2024. You saw 10-year yields down in the 3 2/3 range, and they slowly climbed up to 4.6. And I remember covering on this show all of the different stories about, hey, the vigilantes are back, and everyone's concerned about deficits. And then subsequently, you had the yield go from 4.77 down to 4%. Did deficits in the United States suddenly get better between September and October of 2025?
Is that a rhetorical question? No, I don't think the fiscal situation. Look, it's long run fiscal status of the government's balance sheet that matters. So I don't think, unless there's a dramatic change, it shouldn't.
My point there would be short-term moves in interest rates I don't think can generally be looked at as purely, this is a deficit concern. But increasingly, more and more countries are finding themselves in difficult fiscal situations where they are needing to issue a whole lot more debt in order to fund their obligations. And increasingly, they're having a tougher time controlling inflation due to a number of different factors.
I mean, to answer your question, go back to the simple example again, where the yield is, where the coupon is 5, so 5 is on the top of the fraction, and the price is 100. If I think recession's coming, I might want to sell stocks and buy bonds. I might want something that's going to be money good. So in that scenario, I'm willing to push the 100, which is the par price, up. In which case the yield goes down, right? Because it's a fraction. The 5 is on top. In my example, it stays the same. So it could be recessionary fears. It could be a change in the demand of insurance companies for bonds because their liabilities change. That on the margin, that's a
affects demand. Yep.
Yeah. So for lots of different reasons, the number on the bottom of the fraction that I keep using in my example could change.
So in any case, I think the important context to have here, you've seen it printed everywhere. The yield on the 30-year U.S. government debt is the highest it's been since 2007. That's a long time, so people are writing about it again. 19 years since the last time it got this high. And as Mark mentioned, there can be a litany of different reasons that on the margin, there are fewer buyers of debt at these levels, and so therefore yields are going up. It could be that there is much more issuance of debt, so the supply has gone up, and therefore the price has gone down, driving up the yield. There can be a number of different factors, but ultimately, the sense that you're getting from everyone that's writing is, hey, a number of countries are struggling with inflation, and the concern could be that governments can't get inflation under control over the next several years. And so with that risk being out there, I'm going to demand a higher interest rate on the bonds that I'm buying.
Yeah, the beauty of understanding how bond prices and yields interact is you don't have to really understand the reason or have a culprit in mind. It's interesting to speculate about that, but nobody really knows. So I guess if you have a strong view, like I think inflation is going to be higher than the market currently expects, and maybe we'll get into what the market currently expects later, then you might not want to own a long-term bond even at 5%.
Let's take a quick break. When we come back, talking a little bit about the consumer here. We've got earnings from Home Depot. We've got some updates on the status of buy now, pay later loans that are getting pitched left, right, and center. Quick break. We'll be right back with that next.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning right here on the Financial Exchange Radio Network.
You've been saying one more year for the past 5 years, and now you're still sitting in the same traffic, taking the same exits, wondering when work finally becomes optional. At the Armstrong Advisory Group, we help people create personalized retirement plans so they can better understand their income, investments, taxes, and Social Security strategy. Don't say one more year again without learning about these issues so you can make the most educated decision for yourself and your family. Let us review your portfolio and offer suggestions that may provide a clearer timeline for your retirement. Schedule your no-obligation meeting today by visiting us at armstrongadvisory.com. That's armstrongadvisory.com. The Armstrong Advisory Group. We answer only to you.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last Minute Medicaid Eligibility. That's 866-848-5699. Or you can request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
In July of 2026, there were approximately 4.06 million home sales in the U.S. That's taking a look here at 2025 data. Exactly flat compared to last year. You are not seeing any reasonable uptick in terms of home sale volume. You're continuing to see appreciation in some parts of the country. In parts of the Southeast, you're starting to see home prices actually fall in terms of pricing. But by and large, what is lacking in this economy right now for residences is any sort of activity. And we've talked
Other than that.
Yeah, other than that, it's great. Which makes it tough for realtors. It makes it tough for all sorts of businesses that support that area. It makes it especially difficult for the likes of Home Depot and Lowe's, who make, I think it's something like 40% of their revenue from contractors. And obviously, when you think through the process of buying a home, you just tend to make a bunch of visits to Home Depot or Lowe's. You're buying paint, you're buying a new grill, you're buying all sorts of things that they happen to sell right in your community. And so it's been now a couple of years of pretty rough, again, not terrible environment for these companies. It's not like we are dealing with the '08 recession again, where people are losing their homes and these companies really had a tough time making any money, but just a slow environment for them to operate in, and quite different from what they were dealing with in the early days of the COVID pandemic, when everybody had stimulus money, was buying homes, and shortages of goods was making it so that you could charge whatever you wanted. As such, Home Depot stock is down about 14% over the last 12 months. Lowe's stock is down 13% over the last 12 months. And so all investors are asking this same question, which is, effectively, how do you make things work in this type of environment? And the answer seems to be, we're just going to kind of chug along here and assume that the activity in the housing market will pick up again someday. Comp sales, if you hear us use the term comp sales, comparable sales, same-store sales, these are all the same metric. They're measuring the same thing. They are measuring to what degree did sales in stores that were open at the same time last year increase or decrease, because that's the real measurement, right? If you opened five new stores and you saw sales increase, well, yeah, no kidding. That would be expected. You better have seen sales increase in that case. Comp sales really takes that out and just says, okay, just these stores that have been open for a while, what are they doing? And in Home Depot's case, they saw those sales rise 1.7% during the period that ended August 2nd. But keep in mind, same time period, what's inflation running, Mark?
When are we starting the calculation?
So it was the period that ended, the quarter that ended August 2nd. So
year over year?
Yeah, year over
3.5
year,
headline?
3.5. So effectively, in terms of quantities of stuff that they are selling, presumably they're seeing sales decline, in the 1.5% range. They're just, delivering on some price increases here and there and making the sales look okay in this case. But yeah, I don't expect to see much different from Lowe's when things come here. And the only real question is, when do Americans get used to these new mortgage rates and start kind of transacting homes in a regular volume? Because right now it's been a very, very slow environment for housing. I don't know if there's much else interesting to add when it comes to these home improvement retailers right now.
Yeah, I mean, they're not going to pivot to groceries. Your business is
Maybe.
Home Depot. And construction, as you and Chuck talk about a lot, has typically been the dynamo.
Yeah. Remember they were selling all sorts of weird stuff during COVID?
They still sell some weird.
Yeah, I mean, my dog loses it at the inflatable ghosts this time of year every time we walk by because, of course, it's August 1st. So
you take your dog to the big box store?
Always, yeah, always take my dog to any.
Your dog's
retailer
very
that
friendly,
will let me.
so it's not really.
That's true. Yeah.
Don't you get tired of people coming up to you and be like, "Can I pet your dog?"
No.
Oh,
they?
you like that?
Yeah.
Okay.
Do strangers come up and try to pet the dog?
Always. Yeah.
Especially with kids, yeah.
Yeah.
My kid does it to every dog owner out there.
What is wrong with
My kid? A lot of things.
No. You're both your kids are perfect. But really, people pet us. They walk up to a strange dog. And
They
just
ask
sort of-
usually, but yeah. Yeah.
Lowe's lets this happen. Home
Yeah.
Depot, whomever.
Actually,
I guess they
surprisingly,
have a rider for that.
So,
under insurance?
I knew this about Home Depot and Lowe's that they generally allowed pets inside the store. I was talking to somebody who just insists on bringing their dog everywhere they go, and a lot of retailers will let you just walk through their stores. Like most shopping malls allow their dogs in there, and then most. Yeah, she was saying that you can walk into most Macy's and other types of stores
It's
with
a
your dog and
dog.
nobody cares.
I love my dog. I always had dogs,
Sure.
but I wouldn't
Yeah.
think of taking him to the store. I'd be distracted.
So I only did it because I had
Well, not you. I'm not. Well, I guess I am.
I've
Sorry.
had dogs that hate other people and
Yeah.
are extremely protective, and this was my ways of ensuring that didn't happen with my next animal, and so
Socialize them
he's
on,
very
on
friendly.
Lowe's insurance coverage.
Yeah, exactly. It's precisely what
They must have incidents from time to time. Don't their lawyers tell them enough with the animals?
I'm sure they do. Yeah, I'm sure they do have incidents of dogs.
And I don't mean like accidents.
Biting,
Those are easy.
Biting
it's just a
people.
slab.
Yeah.
But yeah.
Yeah, I'm sure that happens.
Or if I'm not a dog, I happen to like to be a dog, as are you guys. But not everybody likes dogs. Not everybody wants to veer around dog accidents.
Yeah, that's
in
their problem.
Aisle 14 at Lowe's.
Yeah. Also,
Home
most
Depot.
outdoor stores, Dick's Sporting Goods.
That I get.
What's the other?
Well, maybe I don't. Never mind. I don't get that.
Yeah,
Bass Pro Shop.
yeah,
something like
a few
that?
of those
Yeah.
places will allow dogs as well. So if you are inside this winter and trying to figure out what to do, this is why this woman knows all this stuff, in addition to her just enjoying shopping quite a bit, is wintertime when the weather's terrible here, she'll just take her dog for walks in shopping malls.
Last
and
time I bought a
retailers.
car, I don't know if you that there's dogs in the dealership. They're jumping on me. I'm trying to negotiate. She's like, he's friendly. I don't care if I'm friendly usually. Piss off. I didn't come to the petting zoo.
Well,
I'm
they
here
gotta
to, I'm
test
here
out
to
the
buy
car
a
too,
car,
you know?
folks.
Yeah.
I'm sorry. Again, longtime dog owner would lay my life down for my dog is what a lot. Well,
Historic
maybe a
dog
limb.
hater Mark Vendetti. does
Oh,
not
come
want
on.
them.
No. I'm an MSPCA guy. Come on. I just don't get especially in places where food is served or available. That sort of drives me. I mean, I'm not partial to cats for. Sorry, this is going on way too long. This is not funny.
I mean,
Yeah, it was.
I rather enjoy this conversation, and I will intentionally seek out occasionally restaurants that let me dine on their patio with my dogs. So maybe they're doing something right. We have to take a quick break because we digressed quite a bit there, but Wall Street Watch is coming up next on the Financial Exchange.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699, or you can request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Navigating Retirement Housing Choices. Mike, as you get towards retirement, what are some of the considerations for whether you should stay in the property that you've been in for a while or consider moving to a new one?
To me, for most people, they come down to 2 factors. One would be financial, and 2 would be quality of life. And so, first things first, right? I mean, you're heading to retirement. Did you do enough saving to be able to afford to live in the same place you did, with or without that mortgage, with where property taxes and insurance costs have been going? So that's probably number one. But the one that people kind of start to forget about is the quality of life. And so how close am I to family? How close am I to health care? And am I going to be safe in this house 20 years from now from a healthcare perspective?
It seems like for most people, they're going to have different priorities as far as which of those come first. So it very much is not, here's what you do, but more, here are the things you need to consider and then get to your own conclusion.
Yeah, but I think it's important that people think long-term on this, right? You do not want to make this decision twice. And so very often we do see that happen. Hey, I'm moving here because of taxes, and I didn't think about the other qualitative lifestyle pieces about that move.
Folks, our guide is titled Navigating Retirement Housing Choices. There are 2 ways to request it. First, you can call 800-393-4001. Second, you can go to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in negative territory, led by a sell-off in tech due to pressure from rising treasury yields as the 30-year hit a new 19-year high. Wall Street's also digesting retailer earnings from Home Depot posted earlier this morning. Right now, the Dow is mostly flat, down by 16 points. S&P 500 is down over 0.4% or 34 points lower. NASDAQ selling off over 1% or 279 points off. Russell 2000 is down 0.2%, 10-year Treasury yield down 1 basis point at 4.712%. And oil up about 0.4%, trading right around $85 a barrel. Home Depot shares are edging higher after the home improvement retailer beat second quarter expectations on the top and bottom lines and reaffirmed its full-year guidance. The company's CFO told CNBC that it continues to operate in frozen housing market conditions. We'll see more retailer earnings tomorrow morning ahead of the opening bell, where Lowe's, Target, and TJX will report their second quarter results. Meanwhile, several memory chip makers are pulling back from yesterday's gains. Micron Technology down by 5%, while SK Hynix and SanDisk are down by 6%. And according to the information, EV maker Tesla is readying for an August launch of its Cybercab, or a robo-taxi without a steering wheel. Tesla stock is down over 0.5%. I'm Tucker Silva, and that is Wall Street Watch.
Back in 2012, a company called Affirm launched in the United States. Wasn't hugely innovative so far as I can tell. It was basically... it was the first buy now, pay later company that was out there that did the same thing, that a different version of what credit cards, payday loans, loan sharks have done for decades, with a slightly different business model. Yeah, I'm going to put loan sharks in the same category here, because honestly, so much gets written horribly about these companies and what they're doing. And I look at it as like, well, I'd rather people go here than a loan shark or a payday loan. So, this is where we are. But Affirm launched with a pretty different business model that they wanted to make particularly appealing to the consumer that was disgusted with these other sources of borrowing money, where they said, hey, primarily for big purchases, we will effectively lend you the money to make the purchases. There won't be any late fees. If there's any interest, it'll be fully transparent to you. And we're going to really try and make money here by going to the retailer and saying, hey, people will buy your goods more frequently if you offer a service like this. And so, give us a portion of the sales proceeds in order to allow people to complete the purchase with a company like Affirm. Since then, other competitors have been launched, Klarna, Afterpay, with similar but different business models. The other two seem to have more short-term repayment options. Pay in 4 is kind of the way of this these days. Much bigger missed payment penalties and interest rate charges. And so it's morphed a little bit, but overall, the model is the same. You get the good today, and you pay for it over a certain period of time, compared to layaway, when you would make a payment periodically and then get the good at the end of that period of time. Just another version of the thing that we innovate most effectively here in the United States, which is financial innovation.
It's the opposite of layaway.
I guess
it's pay now, get it later. Who wants?
Yeah, this is get it now, pay later. In any case, the problem that many have identified, which is kind of the logical way that this was always going to go, is, hey, these companies want to continue to grow, so how do we do it? Well, we start offering it for things like groceries and electric utility bills and my doctor's office. And I'm not surprised that we have gotten here. It speaks to the poor health of the average American consumer. No?
Maybe. It also speaks to the ability to securitize these things and the demand for these loans.
Yeah.
The explosion in individual investing in vehicles of institutional quality, that's a mouthful. I mean, through your 401k, you get cheap access to a diversity of asset classes that nobody had access to 30 years ago.
Mm-hmm.
The more sophisticated operation of pension and other institutional pools, insurance companies, endowments, pensions, I'll just put them all together. In the institutional category, 401ks could go there too. Created tremendous demand for a securitized, fancy way of saying they take your loan and they
package it together with a bunch of
other ones. And they sell
ones.
it to somebody. There's tremendous demand for this stuff.
Create some tranches,
so
maybe.
it does. There again, it's supply and demand. There's demand on the part of investors who want to give you their money, and they trust you as an investment manager to do something responsible with it. But look, I'm not dismissing concerns about the fragility of the consumer. Those are real. We know real wages are falling again after inflation wages, for example.
Yeah, and I would not dismiss these things as unimportant, right? It is concerning to me that people need to use payday loans.
Do they need to use them, though? I
groceries.
mean, I used a firm recently. It was a big purchase. They offered me 0%. That's a no-brainer. Inflation's running at 4%.
Agreed. I think if you're using it to buy or pay for your utility bill, doctor's bill, or grocery bill, it might be a different situation than somebody saying, hey, I'm making a $7,000 purchase and I'm using these techniques. But maybe not. Maybe it's just there because it's zero interest and people like taking advantage of that sort of thing. There's a lot of people that use
admit
credit
that's
cards.
probably a minority use.
I think so. But as much as I bemoan that and am concerned about the state of the consumer, would I prefer instead they go to a payday lender? No. Right? Like, this is supplanting and replacing some of that business that in many parts of the country was actually banned from existing.
I mean, did you ever use a firm? They make it so easy. You just select it at checkout. They do a quick, very superficial Experian or whatever credit rating agency. Okay. So, I mean, it's almost as easy as paying with your credit card. And again, if you're buying something for $1,000, which I happened to do recently, I had to, and they offered me a firm, I thought, well, I'm good situation. I don't have much debt. I'm older and all that. 0% for a year. It's not going to save me much. But
inflation,
in real terms, my debt is declining over time. Again, I grant you most people don't think that way. But
mathematician in you.
No, not really.
One day you're living in your own home. The next, you can't return home after rehab. Now you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major financial decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now at 866-848-5699 and get your free copy of Cushing & Dolan's guide, Last Minute Medicaid Eligibility. That number again, 866-848-5699, or you can request the guide online at legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Mark, been a long time, but during the 2008 recession, after the 2008 recession, really, it was pointed out that the greater Boston area economy seemingly fared quite a bit better than the rest of the United States. Unemployment rate creeped up less than the overall unemployment rate. Home prices dropped less than the overall drop. And a few things were pointed out about the Massachusetts economy, the greater Boston economy, and one of those was the amount of employment that comes from more insulated areas of the labor force, such as higher education and healthcare. Story in the Globe today is about how that exact benefit seems to be reversing itself in 2026 as more and more universities come under financial pressure to make changes, adapt, and in some cases lay off employees. And it is a pretty marked shift from where we were, where universities were a couple of decades ago. And I actually think it's a good news story wrapped in bad news for the people that work there. But it calls into question, will Massachusetts have the same insulation if we go into a recession next time?
Well, services are less, services meaning things that aren't concrete, a haircut, like you said, education, going to a movie, those are services. There was and remains a long-term trend away from manufacturing into, if you want to think about the economy as manufacturing and services, or goods and services, maybe that's a useful framework. And Massachusetts benefited from that. We pivoted to services with the help of the industry, the educational institutions we have here, and the environment. I'll just say the environment they created that was conducive to incubation of all the tech firms that we have here in Massachusetts, including biotechnology and other great services firms. I compare that to, say, Ohio, which didn't pivot to services. Massachusetts and Ohio were equally rich on a per capita basis 50 years ago. Now Massachusetts is more than 50% richer than Ohio on a per capita basis. Might we see a reversal of fortune there? I don't know. I find it hard to believe the economy is going to become more manufacturing intensive despite policymakers' best efforts to reorient.
Yeah, I tend to agree. I don't think that being so services focused is going to work against Massachusetts if there is another recession. I do think that the job security that a university could offer you 20 years ago might not be quite as prevalent in 2026 as it was back in the 2000s. Let's take a quick break. When we return, I want to talk a little bit about Kevin Warsh and the Federal Reserve, a bunch of changes that they are attempting to implement, and a fair bit being written about those changes as well. That's next on the Financial Exchange.
Breaking business news as it happens, only here on the Financial Exchange Radio Network. A nursing home stay can cost more than $14,000 a month. Before you assume you have to spend everything to qualify for Medicaid, get the facts. Call 866-848-5699 for your free copy of Cushing & Dolan's new guide, Last Minute Medicaid Eligibility. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Who wants to play golf to support the Disabled American Veterans Department of Massachusetts? I know you do.
Let's do it for the DAV.
Mark your calendars. Monday, August 31st, Granite Links, Quincy, Massachusetts. A full day of golf and entertainment, and all to raise money for the Disabled American Veterans Department of Massachusetts. Let's go. DAVMA.org/event.
Let's do it for
DAVMA.org/event.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Missed a show? You can find them on our YouTube page. The show streams live every day, but every hour is archived, including all of our most newsworthy interviews. Go to YouTube and search for The Financial Exchange Radio Show.
Mark, I want to talk a little bit about the U.S. Central Bank, Federal Reserve, and the guy who leads it, who is now Kevin Warsh, who replaced Jay Powell a couple of months ago. The next meeting for the Fed isn't until about a month out, 16th of September, where they are, at least futures markets are pricing in about a 2/3 chance that they hold steady on rates here. And everyone in financial circles, specifically Bloomberg, Financial Times, CNBC, Wall Street Journal is writing a lot about the Fed. Op-ed pieces are getting written about the Fed because everyone's got an opinion, and he is, to be fair to those who are writing, he is diverging from what was the Fed's standard practice for the last decade or so.
Funny thing is, there's nothing to write about.
There's not much. Well, because he won't tell you anything.
Policy's not changed.
Yeah.
He's not showing his hand. They're just whining.
So I want to hone in on, what he has actually said they are going to do and what people are just writing about. Because we've got a couple pieces. One from the Journal, Warsh is wise to ditch the dots, which he is doing. Another one from Bloomberg, ditch inflation targets, better to overhaul them instead. So to your knowledge, Mark, has Kevin Warsh mentioned removing inflation targets from the Federal Reserve's mandates?
No, he's not said it publicly. My guess is, based on what I know about his philosophy, his ideology, is he would love to ditch the inflation target.
Yeah.
Because it binds the Fed's hands.
And he has opened committees to research,
He has, and he's put some outstanding economists on them.
What is the right way to measure inflation?
Yeah,
what is the right
approach that, I think, exactly the right way.
He may have some predisposed thinking to how it should be done, but ultimately he hasn't expressed any of that to the public so far as I am aware.
No.
He's just
opened
people to research it and come back to him with ideas. And so I got to keep going back to this. I personally have a pretty big problem with the Federal Reserve changing or doing away with an inflation target when you still haven't reached the inflation target of the previous Fed. And I see that as a little bit problematic if your goal is to convince the general public that you've got inflation under control. We said that under Powell, right? A lot was being written back during 23 after we were recovering from the worst inflation in a few decades. Like, hey, why do we have this 2% target? Is it meaningful? Should it be looked at? And I think both of us agreed at the time, yeah, maybe, but the time to look at it is once you've defeated inflation, not while you're still battling it.
So we've had one since 2012. We've had one informally for decades.
Sure.
Greenspan, who was chair before Bernanke, so 87 to 06. He adamantly opposed articulating publicly an inflation target because he knew it would bind their hands. But he also repeatedly said inflation should be low, stable, which he defined as nobody should be thinking about it, which I think is as good a working definition as any. The argument for an inflation target comes from theory, so it's not surprising that an academic like Bernanke would have been the first one to enshrine it and to express it. The theory says if you tell people you can hit 2% and they find that statement credible, i.e., you're going to inflict pain on the economy to reduce inflation if need be. That's what I mean by credibility and what a monetary policy economist would, I think, define credibility as more or less. Then it's going to be easier to achieve that goal because people will stop bidding up prices, stop demanding high wage increases, stuff like that, if they believe the Fed's going to get inflation down to a low and stable rate. So there is a theoretical and maybe even a practical argument for a target. As you point out, it would be terrible to move the goalpost now, though.
This is also a divergence from something some lawmakers have been asking about, which is a formulaic approach to Fed policy. Right? I don't remember who has really pushed this on Capitol Hill the most, but the idea being, hey, put in place a formula and hold to it that if inflation runs X, you're going to move the rates in this direction. Why does that not work?
Because
and why is Worth trying to get even further away from something
Some
like
people
that?
invoke the so-called, well, look, I'm not going to diss formulas entirely. Milton Friedman, who a lot of people know, advocated a K% rule, meaning money supply, it's not an inflation rule, it's a money supply rule. He said let money supply grow at 3% a year, make it such that a chimpanzee could run your central bank, make it mechanical. So he advocated a rule for growth in the money supply. Most economists would not agree that that's an effective way to contain inflation. You might either get inflation that's too low or too high. So we don't have enough time to talk about rules, frankly, for, right now. Maybe we pick up later if that interests you, because it's like a big topic. I can't encapsulate it in 15 seconds.
I get it. Ultimately, though, what we have here is a new Fed that is attempting to gain credibility, but also trying to reform a lot of the different features of how the Federal Reserve works. Again, I don't want to overstate what Warsh is doing, but he is disrupting the apple cart a little bit here and attempting to reshape how Fed policy is done.
He recognizes they haven't met their 2%. What is the point of a goal if you haven't met it in 5 years? It's you're the emperor with no clothes. Everybody knows you haven't hit it. We ain't going to hit it this year. We're already at roughly 2%. So better to revisit the whole
is it better to
rationale.
Revisit the policy or revisit the goal?
Both. By revisiting the former, you're necessarily reevaluating the merits of the latter. Yeah. And he recognizes that the Fed will lose credibility if it has not already, if nobody believes, except the FOMC, Federal Open Market Committee, that they can eventually achieve 2% inflation. I don't believe it. I don't believe we're going to have anything like it in the next 10 years. Do you? Either one of you guys believe that?
Crickets.
Thank you.
Let's take a quick break. A lot more to cover in the second hour of the Financial Exchange. We'll be right back. Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
When a heart stops, the clock starts. you are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable. And it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699. Or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Mark Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Mark Fandetti.
Good morning. Welcome back here to the Financial Exchange. It's Mike, Mark, and Tucker with you on a Tuesday where we've got all three major indices in the red. The Dow just barely off about 7 points, flat for the day. The S&P 500 off 43 or about 0.5%, but the NASDAQ is the one in focus this morning. Off 357 points, 1 1/3% in early trading. This on the heels of higher oil prices, threats of strikes again in the Middle East. We will see where all that goes, but oil prices up to $85 a barrel, up about 0.9% this morning. That's bringing gas prices up with it, up to $4.06 per gallon on the national average. We're also seeing a little bit of push again in bond yields. We talked about this in the first hour of the show, but the 30-year Treasury is topping now 5.33%. That is a 19-year high. Last time we saw yields on the 30-year Treasury this high was back in 2007. We can talk about the cause and effect there, but the reality for all of us is that it's meaning higher interest rates. The average 30-year fixed rate mortgage now sitting at 6.73%, in part because of these higher interest rates that are being driven up. And Mark, let's talk a little bit more about this phenomenon we're seeing. And as we discussed previously, nailing down the proximate cause of yields moving in one direction or another over a short to even intermediate period of time is next to impossible to do. Occasionally you can look at, yields in the Argentinian economy and say, well, pretty clear what's going on here. Other times you look at, yields climbing globally and you say, well, this could be any number of factors, but let's talk about
True of stock prices, too, for that matter.
Sure, yeah. Can I definitively say why Home Depot stock is up 1.5% this morning? Well, the earnings might not have been quite as bad as we thought, but you can't say these sellers are selling, these buyers are buying, and therefore the price is going up. Same goes with bond prices and interest rates.
Yeah.
But instead of trying to suss out where the demand is dropping or where their supply is increasing, let's just talk about why it concerns people that interest rates are moving up, right? What happens if it becomes prolonged, if it gets away from the Treasury and the Fed, and why it could create problems, certainly overseas, but maybe even here in the United States.
Well, it exacerbates the debt sustainability problem. And by that, I mean debt relative to GDP, how much we owe collectively. relative to divided by, literally, our output of goods and services, which we measure according to GDP, gross domestic product. There's other ways to measure it, but that's the most widely publicized and useful measure. At some point, debt to GDP and debt held by the public to GDP is now a little bit over around 100%. At some point, investors aren't going to believe that's going to get paid back. And I don't mean default. The U.S. government will not default because we can print money.
Yep.
But at some point, they're going to believe bond investors are going to incur losses. Yep. And that's what happened during COVID, by the way. Bond investors got screwed via inflation. Interest rates went up by a lot. Existing bondholders saw huge, unprecedented principal losses. Broad bond indices went down during the heat of that pricing in of that realization. So, Mike, this matters because the Treasuries, the interest paid by the U.S. Treasury on debt, we all know it's about $1 trillion. We spend now more on interest than we do on defense. That's only going to rise. The fiscal situation in this country is a mess. It's deteriorated in the past decade under Trump, then Biden, now Trump again, is an understatement. We've been more wasteful than ever. There was a lot of hand-wringing during the Reagan years, and debt did double from $1 to $2 trillion during those years. I'm not going to deny that, but you could argue, well, that was an investment to win the Cold War. Debt hasn't quite doubled in the past 10 years, but it's up well over 50% from a much bigger baseline. And in the last generation, it's up from around, $2-3 trillion to now nearly 40 trillion, all debt, not just debt held by the public. These numbers are staggering, so staggering that I don't even know how to conceptualize them, frankly. At some point, it's going to matter, and at some point, interest rates will, if nothing is done, go up, I assume, by a lot as investors price in the unavoidable money printing that's going to be used to pay down these obligations.
And that's again, what the risk of not getting your money back. It is not a concern for most people of the U.S. government, the Treasury, just saying, well, we're not going to honor those debts and we are going to cancel it. That's not likely what they're going to do. But if the U.S. government does, in fact, need to print a whole bunch more money in order to pay back those debts, then you're being paid back in dollars that can buy a lot less stuff otherwise.
Right.
This is less of a problem here in the United States than it is for other countries. I want to focus
Very
on
much
that.
So. Historically, anyway. Well, hold on. I mean, there have been periods when we've inflated a lot of debt away.
Yep.
When we jammed this problem down the throat of bondholders. Mm-hmm. Civil War, right after World War II, less so, but... And then if you count the Confederacy, most people don't, as a U.S. government, but it happened here, inflation was like 5,000%.
What some would argue, again, what I would argue is different today is the fact that we are the reserve currency. And why I think we're given much more leeway on our debt than pretty much any other country out there is because there are a lot more people and institutions that need to buy dollars in order to conduct
that won't stop
government
interest
business.
rate. I mean, we have been for the better part of a century now, and that won't stop rates from going up by a lot. It did not in the 1970s, certainly.
Yeah, and so when you
we'll lose that privilege too, incidentally, if we continue to abuse
unstable. Yeah,
I don't know what's going to supplant the dollar. It's so dominant in foreign exchange and in settlement and payment, but investors won't put up with it.
Let's take a quick break. When we return, hold on, I need to look at my agenda here. When we return, we're talking a little bit about the AI trade, specifically what we have seen in stocks for the last 5 years rolling now. Pretty unprecedented levels of return. Certainly nothing we've seen in the last 2 decades. What it's meant for investors, what's driving it, and what might be coming next. That's next on the Financial Exchange.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last-Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last-Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing, to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Follow the Financial Exchange Show on Instagram and see what's driving the conversation about Wall Street and economic trends. This is the Financial Exchange Radio Network.
The return that we've seen on stocks really since the COVID pandemic has been nothing, just short of unprecedented. There have been very few periods of times that we have seen a compound growth rate like what we have seen from U.S. equities since that period in time. I couldn't get exactly at the time frame that they're looking at here. I think it's a 5-year compound annual growth rate of 15% on the S&P 500 according to Dow Jones market data, and I believe that's looking at this summer's close, August close in 2026 from what would be, 2021 would be the 5-year time period. Right? In any case, yeah.
Yeah, I always have to do that. I always want to subtract.
In any case, you're looking at like the post-COVID pretty low levels to now, and it is a pretty phenomenal return. And I think there's a few messages in here, but there's really one that I think is relevant. The Market Watch here, listed out a bunch of things that they considered to be scary moments in time during that. A global pandemic, the fastest 30% equity drawdown in history, supply chain crisis, meme stock mania, 40-year high inflation rate of 9%, Russia invading Ukraine, again, $140 a barrel oil prices, the Fed had to hike 75 basis points twice in back-to-back meetings, short-term bond yields going from 0 to 5%, an inverted yield curve, Silicon Valley Bank crisis, the 2022 bear market, worst bond market crash in history, one of the worst years ever for a 60-40 portfolio, mortgage rates going 3 to 8%, commercial real estate crashing, the China real estate crisis, government shutdowns, debt ceiling standoffs, credit rating downgrades, the yen carry trade, Liberation Day tariffs, Iran war, oil gas price spikes.
I'm going to go to the bathroom.
30-year treasury yields. Again, all of these pretty much occurred over the last 5-6 years.
Yeah. So what's their point? Like the market's indestructible?
No, I think the point, I'm not sure they're trying to make that point.
It pays to stay put.
I think it pays to stay put is the message they're delivering here. Because any one of those 30-odd items that I just listed might have been enough to spook somebody away from the stock market. In many cases, I know people that did spook people.
This isn't over yet, Mike. Maybe it should have been. The story's not. We're never on the last page of the last chapter.
We're not, but I think
unless you cashed out, and then you don't care anymore. But for most of us, cashed
out and did what? Are sitting in cash?
I don't know. You bought an annuity or something.
Yeah.
You say you were 65. You said, I don't need the growth anymore. That's probably not advisable for most.
Yeah.
But I get my point is for most people, the story continues to unfold, and we may have a very different retrospective
on
year
the 10-year
return. Look, by any measure, the stock market is obscenely overvalued right now, unless AI not only delivers very high rates of economic growth, but profit growth, moreover, delivers those rates of profit growth to existing companies. So this may not end well.
Of course. No,
and you weren't saying differently. I recognize that.
There will be a crash. There will be many more crashes.
Yeah, but if you're a long-term investor, those crashes will be good.
I guess that's the point. And I know I hate to
thinking out loud.
Call you on statistics without preparing you for calling you on statistics.
I'll just make it up. It's okay. Nobody cares anymore.
Like the investor that's got a 30-year horizon.
Yeah.
The message is don't worry about this stuff. The message of don't worry about this stuff is because over 30-year time horizons, I guess first things first, do you know, has there ever been a 30-year time horizon in the last 100 years of stock market investing where an investor has lost money?
Now, maybe if you use like the Stern data set from NYU Stern, you can get 100 years because it goes back to 1927 or 26. Maybe it starts. Maybe very early on it was close, but it's so rare.
Period.
Yeah, which is of course extreme, 90% drop, peak to trough in the Dow. That was so extreme. There's not going to be another Great Depression because we jettison the gold standard. So that's not going to the proximate cause, to use your earlier phrase, which I like. There's wide agreement that monetary policy could prevent another Great Depression. There could be a prolonged period, like the 1970s were terrible for equities, but they were flat in nominal terms. In real terms, you lost money, but they were flat in nominal terms. So yeah, I think. That is such an extreme counterexample, Mike, to long story short here, to finally get around to answering your question, that we can rule that out. I'm very comfortable. I think most researchers would be comfortable with saying if the economy structure doesn't change dramatically, you should be at a 30-year horizon, stocks are very likely to beat bonds. And that is the relevant comparison, by the way, stocks relative to whatever else you could have done. Cash, bonds, right?
The counterpoint that I always get when I make this point, whether it's me talking about stocks over a 10-year return where they rarely lose money, or a 20-year return where it almost never happens, or a 30-year return where over the last 100 years, Mark and I would struggle to even find a 3-decade period where stocks lost money. The counterpoint that I hear from a lot of folks is, well, that was fine when I was 35 and investing in my 401k, but I'm not 35, Mike. Now I'm 60. And I've only got 5 years.
Well, okay,
that's
a different story. You don't have a 30-year horizon anymore.
It is a different story, but Here's what I struggle to convey to people. I'm 60 years old. I'm 5 years away from retirement. And my next question is, sounds good. Are you planning on spending your entire 401k the first year of your retirement? Because if you are, then you're absolutely right. You should have no money anywhere near the stock market. But if you're like most people, at 60 years old, if you're a married couple, there's a pretty good chance you still have a 30-year time horizon. I don't know what the odds are for a married couple at 60 years old. But for a married couple at 60 years old, I think there's something like a 1 in 3 chance that at least one of you makes it till 90. That gives you a 30-year time horizon. And it does not certainly mean that you take all of it and be as aggressive as you were when you were 35. But far too often I see people approach that retirement stage and say, okay, well, now I need to get twice as conservative or, take 3/4 of my portfolio and change what I'm doing. And the answer is maybe yes, but by doing so, you have to be aware of and concerned about all the risks that affect you. And I will tell you from my firsthand experience, which might be different because I primarily meet with people who have been successful enough to save a fair bit of wealth. But for the vast majority of those folks, what I have to convince them of is, as concerned as you are about that next stock market crash, which we will get, and as great as it's been for the last 5 years, who knows what the next 5 years bring, you need to be at least as concerned about the pressure of inflation on this bucket of money and what that's going to do. And if you reverse course too much because you're retiring and you're nervous about things, then yeah, maybe you don't have a problem with the next stock market crash. But what happens to your scenario if inflation runs a percentage point higher than you're anticipating? As you approach that period of time where you will no longer be saving for your future, looking at this stuff with a critical eye and going beyond the simple 60-40 or target date retirement fund to address your specific scenario is very important. If you have questions along those lines and you'd like to learn more about what it is that Armstrong does for its clients, 2 ways to check that out. One, you can go to armstrongadvisory.com. The other way, by the way, we're hosting an event on Thursday of this week out in Framingham where we're talking about all sorts of issues like Social Security and Medicare, and it's free to attend. Also at armstrongadvisory.com. Learn more. Go to armstrongadvisory.com or give us a call at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Auto insurance premiums saw massive increases during COVID because of a few different factors. One being, it wasn't actually during COVID. Premiums fell during COVID because nobody was driving, therefore there were no accidents. But after COVID, when car prices went through the roof, replacement parts were tough to get a hold of, and prices generally went up for both new and used cars. Insurance premiums followed suit because making those repairs became increasingly expensive to do. So I didn't want to misqualify that. But what we are seeing this year is, after those premiums readjusted to the new normal, you're actually seeing insurers making a fair bit of change on how much they are collecting in premiums compared to how much they're paying out. And so they are actually lowering premiums here and there. What this means for the average person, it may pay to shop around more than it has over the last few years when it comes to auto insurance. Obviously, this is hyper-localized and hyper-specific based on your own driving history, but the piece here from the Wall Street Journal cites that the loss costs and claims expenses as a percentage of premiums are in the low to high 80% range, whereas typically they're targeting around 90, meaning these insurers are trying to expand and grow their business. Quick break, Wall Street Watch, and Dan Stack from the DAV coming up next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
The biggest retirement decision you make may have nothing to do with your investments. This is Mike Armstrong from the Armstrong Advisory Group. You've worked hard preparing your finances for retirement, so take the time to think about whether your home will still fit the life you want to live. The house that's perfect today could become more work than it's worth a few years from now. Stairs, maintenance, a big yard, or even being too far from the people and places that matter. Our new guide, Navigating Retirement Housing Choices, walks through the different stages of retirement, the housing options available, and the questions you should be asking now before a decision becomes urgent. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled Navigating Retirement Housing Choices. Mike, when we look at the considerations for people in their housing and retirement, one that comes up are these continuing care retirement communities, CCRCs, or age-in-place communities as they're known. How does someone make a decision about looking at one of those?
Well, I think obviously you have to sort out your priorities, but the first thing is to think long-term about this. And what people sometimes overlook with these places is that term continuing care means that they adapt to your needs over time, but they do not just allow anyone in. In a lot of cases, they will have cognitive and physical tests that you need to pass in order to be accepted into these communities that then will provide all sorts of care later in life. And so I think early on is always better if you're considering that sort of thing.
The financial aspect of these also has a number of considerations as well in terms of what's actually affordable given your particular budget and liquidity.
Do I need a buy-in? Am I going to rent a place? What are my options for later in life? And then all sorts of tax considerations. Hey, I really want an income tax-free state. Well, is that worth it if I'm going to be paying more in property taxes given the composition of my assets and income? All of these really important considerations.
The guide this month is titled Navigating Retirement Housing Choices, and you've got a couple different ways to request it. First, you can call 800-393-4001. The second choice, you can go to armstrongadvisory.com and request it there. Again, that website is armstrongadvisory.com, or you can get it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in negative territory, led by a sell-off in tech due to pressure from rising Treasury yields as the 30-year hit a new 19-year high. Right now, the Dow is down 0.25% or 120 points lower. S&P 500 down 0.6% or 46 points lower. NASDAQ selling off 1.25% or 331 points lower. Russell 2000 down over 1%. 10-year Treasury yield flat at the moment at 4.72%, and oil up over 1% now, trading at $85 a barrel. Home Depot shares are rising over 0.5% after the home improvement retailer beat second quarter expectations on the top and bottom lines and reaffirmed its full-year guidance. The company's CFO told CNBC that it continues to operate in frozen housing market conditions. We'll see more retailer earnings tomorrow morning ahead of the open, where Lowe's, Target, TJX will post their second quarter earnings. Meanwhile, several memory chip makers pulling back from yesterday's gains. Micron Technology selling off 7%, while SK Hynix and SanDisk are falling by 8%. And according to the information, EV maker Tesla is readying for an August launch of its Cybercab, or a robo-taxi without a steering wheel. Tesla stock is down over 0.5%. I'm Tucker Silva, and that is Wall Street Watch.
Joining us now is Dan Stack from the Disabled American Veterans Department of Massachusetts. Talk to us about the upcoming race and other events. Dan, thanks for coming on. Appreciate it.
Mike, as always, really appreciate you having me. Thank you very much.
So first things first, Dan, I have to check my calendar. It's mid-August, and yet you managed to sell out the race for the DAV 5K in November. We are months away here, and it is filled. What makes this race so special to people? Because clearly, it's gathering enough attention to sell out months ahead of time.
I think if you have attended any of the past events, and this is our 6th consecutive sellout, you feel that euphoria that the public gives in regards to their appreciation for what veterans have done. And especially this year, the 250th anniversary, I think that helped sell this out more than anything else. It really, 54% of everyone who has basically coming to this race is someone who has been there before. We have 375 veterans that are coming. It's just an amazing event where I know myself, my entire family comes. And, it's very proudful that they have pride in what their father has done in his service to the country, and they're kind of like fulfilling the fact that, hey, we want to show appreciation not only to our father, but to all veterans that have served this country over these 250 years that we have been in existence. So it's an amazing, amazing event, and we're really proud to say that, it sold out 82 days in advance, and that 82 days is because everyone clicked that button when they got the invitation and said, yes, I want to participate in the DAV 5K on November the 7th at Castle Island.
So, Dan, I know it's sold out. I know people cannot still register to race on November 7th, but I do still want to talk about the event because you're going to continue to do it for years to come, and it is just an awesome event to even come spectate down in Boston at Castle Island. For those who have not been to this specific space, Fort Independence at Castle Island, a pretty special spot right in the Boston Harbor. But talk to me about the event itself, what goes on there. I could do it, but I'd rather you tell me about the howitzer cannons and the fire boats that are out there. Pretty special stuff that happens.
Well, last year, unfortunately, the howitzers weren't able to be there because of the quote budget deficiencies that were going on. They happened to be, there was no money in the government at that time. There was a shutdown. So we were very thankful that the Concord Minuteman came down, and they actually started us off and shot, and they're going to be back this year along with the howitzers. We out in the bay, we have the Boston Fireboat that comes out. The Boston Fire Department hangs the huge flag at the end of the causeway that everybody runs under. Not only that, one of the nicest part about our 5K is all of the food vendors that come out. We have, Wahlburgers, the sausage guy. I can't even name everybody that's there by me. We have all of these individuals that come out and participate and provide free food to all of the participants and their guests that are there. It really is a family event. We see more and more families coming to it. I love to see how they all take their pictures after they run with their families with the DAV sign behind it. I love the solemn part of everyone. You can see the veterans as they are passing the Heroes on the Hill, the Lou Pasquale Heroes on the Hill, how they stop and salute all of the flags representing all of the past veterans that have passed over the last years. So, it's an amazing event. There's something to do the whole time you were there. Plenty of food is provided. So we're really excited about what's going to be happening this year on November the 7th.
It is, Dan, a run to honor veterans. Obviously, a lot of non-veterans, non-military are running in the event every year. But I saw that you had some 400 veterans that are actually registered to race that this year. It does really speak to something. I know you've seen growth from run clubs and universities who have their cross-country teams going. But 400 veterans actually registered, and really seems to show the commitment that your team has to supporting this specific group here in Massachusetts. It's quite a thing.
One of the things about veterans, period, is when they believe in a cause, they will support it. And to have almost 1/3 of everybody that is going to be running to be veterans with their families, that says an awful lot. And the DAV is a very proud organization. We've been in existence over 100 years. We work very hard to make sure that the veterans that we service are well taken care of, whether it be their claims that have to go before the Veterans Administration to make sure that they are properly adjudicated and they receive the exact compensation they're entitled to, or to the 23.5 trips around the earth we have done with our transportation program to make sure veterans get to and from their VA medical appointments, or the mere fact that we have over in Massachusetts 250 volunteers at all of our VA medical centers that have given over 25,000 hours of volunteerism. This really has saved the Veterans Administration over $1 million by us helping them make sure that the veterans in our healthcare system are well taken care of. So I am very proud to be the Chief Executive Officer of the DAV, Department of Massachusetts. I know all that we do. Our volunteers and our staff are out there every single day trying to help a veteran and make sure that their life and their family's life are a little easier in the future.
Dan, I know our focus is and should be on the DAV 5K. You also have another event going on pretty soon. The golf tournament is coming up here. What can you tell me about that upcoming event?
We are very fortunate to have the Applied Underwriters, basically invitational, which benefits the disabled American veterans. It's our corporate golf tournament. It's held at Granite Link Golf Club. This year it's going to be August the 31st.
Oh, coming right up.
It's a couple of weeks away, but I do have I still have about 5 or 6 openings for teams if they want to join us. And they can basically go on to davma.org and click on the link, and that'll bring them up to what they need in order to register or sign up. We are very grateful to all of those that are our silver sponsors for the DAV golf tournament. Our silver sponsors, it's a $5,000 contribution, but not only do they get a team in the corporate event, their name and logo was also placed on the DAV 5K road shirt. So, it's a lasting memory, and they help benefit both the DAV golf tournament and the 5K. So, if anybody is out there that loves golf and loves supporting veterans, and you can get your corporation to put a team in, we would love to have you. Again, that's davma.org. Click on the link, Corporate Golf Tournament, for the Applied Underwriters Invitational.
Dan Stack from the Disabled American Veterans Department of Massachusetts. Dan, thanks so much for being here. We everybody here at the Financial Exchange, just so proud of the work that you guys do and just so happy to partner with you year after year. So thank you for being here. Thanks for filling us in, and we will talk again soon.
Hey, Mike, just my last little thank you to you personally, but more than anything, to Money Matters, to the Armstrong Group and the Financial Exchange. We wouldn't have sold out if you hadn't been able to constantly put our PSAs up on your radio stations, letting everybody know what we do. So again, thank you so much for everything that you have done and helping us make sure that we can assure that veteran lives are going to be a little easy in the state of Massachusetts because of what we do. Thanks again, Mike.
Thanks, Dan. That's Dan Stack again, the CEO of the Disabled American Veterans Department of Massachusetts. We are going to take a quick break here on the Financial Exchange. We'll be right back with some Stack Roulette.
From markets to money to business and financial news, watch the Financial Exchange every day on YouTube. Hit that subscribe button and keep up to date on the market news you need to know. This is the Financial Exchange.
Stuck in traffic again? Same road, same commute, same thought. How many more years am I doing this? 1, 2, 5? At the Armstrong Advisory Group, our financial advisors help people answer one of the biggest retirement questions. Could I be retired right now? Many factors may affect your decision, including what your income might look like and whether your retirement plan is built for the life you actually want. We can provide you with some strategies to help you see where you stand. So before you assume you have to keep working, get a clearer picture. Visit our website at armstrongadvisory.com and schedule a no-obligation meeting. The Armstrong Advisory Group. We answer only to you.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A nursing home stay can cost more than $14,000 a month. Before you assume you have to spend everything to qualify for Medicaid, get the facts. Call 866-848-5699 for your free copy of Cushing & Dolan's new guide, Last Minute Medicaid Eligibility. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Who wants to play golf to support the Disabled American Veterans Department of Massachusetts? I know you do.
Let's do it for the DAV.
Mark your calendars. Monday, August 31st, Granite Links, Quincy, Massachusetts. A full day of golf and entertainment, and all to raise money for the Disabled American Veterans Department of Massachusetts. Let's go. DAVMA.org/event.
Let's do it for
DAVMA.org/event.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all.
Visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Well, the 2026 DAV 5K Boston is officially sold out. The race is set for Saturday, November 7th at Fort Independence at Castle Island. But even if you can't participate, you can still help our great American heroes by making a donation. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
What do you have for us for Stack Roulette today, Mark?
Mike, food inflation through July, the latest period for which we have inflation figures, is up about 2%, 1.9%. The price of sugar and sweets, however, is up twice that, nearly 4%, 3.7%. So I'm rounding up a little bit.
Save America. Bring down the cost of gummy
sweets.
bears.
Raw sugar futures. The reason I bring this up is Bloomberg printed a story at 11:30. Raw sugar futures rising to their highest level in more than a year. The most active sugar contract rose as much as 4.3%. I don't know how unusual a big swing that is, how large it is, but they make it sound sensationally large, so I'm being dramatic. Prices in New York, the market, I guess, in which these futures are traded, up about 20% in the past month. So no relief in sight.
Good thing we're all taking these GLP-1s, because otherwise their grocery baskets would be pretty darn expensive. I don't know if those weight loss drugs specifically help you out with not being interested in sweets, but just it does more than just your quantity of food, because all of the big food companies out there are kind of shifting the formulas in their recipes to appeal to people with GLP. In fact, sorry to completely diverge from this, but I was driving by a restaurant in my town the other day, and I was just parked at the traffic light, and I could see inside the restaurant window, and there's a little flyer on the table, one of those like card flyers on the table, and it was scan here to see our it was, are you on GLP-1s? Scan here to see our special menu.
Smart.
I guess so. I've just never seen it so in your face before in a restaurant. Like,
was this a chain, I assume, or was it just?
It was not. It was a single space restaurant, single location restaurant in the town of Needham. And I don't know. Am I wrong in saying that I detected some shame early on from GLP-1 users that like didn't want to talk about it all that publicly, and has it now shifted from some degree of embarrassment to, oh yeah, I'm on GLP-1s, I've lost a ton of weight, and I'm willing to scan a QR code at my dining table in order to browse the menu?
I think it's definitely way, way, way more accepted than when it first came out.
Yeah, definitely.
Like it's like celebrated now, which is,
weight
loss is great. Yeah.
Yeah. I didn't expect it to be so forward. Like, I kind of expected
marketed in a restaurant.
In a restaurant, I kind of expected, hey, check out our low calorie menu or other items. No, are you on GLP-1s? Scan here for our special menu. I thought that was very forward for a restaurant, but I mean, there's a reason they do it. It must be working to some degree. But yeah, I just found that fascinating and completely forgot about it until right now. You seem like you want to say something.
Yeah, I'm not sure how I feel about it. You're so someone who's on the drug is trying to lose weight. They may or may not be self-conscious. To make them very conspicuously scan a code, it's a public declaration that I'm on a drug for weight loss.
Yeah.
But it also should be like encouraged.
Yep.
Like we celebrate when people wear a nicotine patch, or I guess these days take a take something to wean you off
Yeah,
nicotine.
you know what? When I think about
it should
this,
be. I guess what I'm saying is we need to change our. It should not be shamed because we want to. If only to get my own insurance premiums down, I want to encourage anybody who thinks that they're overweight to lose weight.
And does anybody feel shame about being on a statin?
That's kind of what I mean.
Right? Like,
being overweight is you're probably predisposed.
Yeah.
Many people are anyway.
All on
It's
board.
absolutely nothing to be embarrassed about.
All on board. Yeah, I'm with you.
I think we need to change
I guess it was surprise, not distaste or anything like that. I was just surprised that the company, the restaurant decided, this is something we want to be very public.
Because it's
and push
impolite to
forward.
comment on somebody's weight. It's not impolite to say, hey, you quit smoking. It might be a little bit impolite to say, hey, you lost weight.
And you know what?
the
This is
person
better
really
than
well.
going to the table and be like, oh, that person could use our low-calorie menu. Maybe I should ask them
Maybe
if they
that's
want
what
it.
Right.
Airlines are in a standoff over price cuts as jet fuel costs are easing a bit here. I don't think they're going to be price cutting anytime all that soon because as much as we have seen jet fuel prices ease over the last few weeks a little bit, is there anyone that is sitting here today looking around at the situation in Iran and saying, hey, you know what? That seems stable enough that I'd be willing to lock in lower profits on airline tickets or gas prices for the next 6 months. That I'm pretty convinced we're going to see energy prices calm down over the next 6 months because I'm certainly not confident. I don't know why an airline executive would be. Do you feel confident?
No, of course not. that energy prices are going to stay where they are or come down?
Yeah.
No,
in fact, I feel quite the opposite.
That sounds like a foolish view.
So, they have eased a little bit recently. Airlines don't seem to be moving on ticket prices. Furthermore, the kind of first company to cut on prices, Spirit Airlines, doesn't exist anymore. So I don't see a lot of domestic pressure for that to happen. So unfortunately, I just don't see much of a case for gas prices to come down, airline tickets, or anything that's really a petroleum derivative to help us out anytime.
If they stay where they are, of course, the implications for the bigger picture are positive. We're not going to get more inflation.
Yeah.
But that's stating the obvious.
Yeah. Doesn't mean airline tickets are going to come down.
Nope.
Stocks remain in negative territory here as we close out the show. Dow off 0.25% now. S&P off 0.5%. NASDAQ down a little bit more than 1%. We'll be back at it tomorrow with more earnings. Have a great rest of your day, folks, and see you in 22 hours.